It's so easy to confiscate your wealth, your work. Because what do? We work for money, right? And then we try to save it and accumulate it for later, any wealth, any money that we don't need today for down the road. But the whole system, the whole current fiat system is based upon constantly compounding inflation. And as long as there's some purchasing power in there to take, well, they can do that invisibly. That's the inflation tax. They can tax you without going to legislation. But for corporations, that's what this wealth and income inequality is all about, because the current system enabled that. But we're at the end of the life cycle. There's officially, and this is true globally, virtually no purchasing power left. We're all experiencing more rapid inflation, which is part of the deal, but have they lost control of that? Because even the central bankers have admitted, Christine Lagarde, that they don't understand inflation, which is why they used it in the system, because they knew people don't understand it. They get married to the numbers rather than the utility. And even wages, right? I mean, the average wage back in 1971 was something like $9,500, and a family of four could live with one wage earner. Today, it's like $57,000. It takes two wage earners. You're still paycheck to paycheck. There are a lot of people that are earning up to $250,000 a year that are paycheck to paycheck. So yeah, that nominal confusion, and they knew that. That's why they created the system based on that nominal confusion.
Lynette Zang has been saying that the reason we're seeing a division between the West and the East, like China, Russia, and India, is because central banks around the world are accumulating more gold than ever before, even more than they did back in 1967 during a major transition. She often mentions that whoever holds the gold retains the power and the choice, and she believes we're witnessing a shift in financial power on a global scale from the West, particularly the US, to the East, especially China. She also points out that the US has had a huge advantage since the 1940s as the world's reserve currency, but she warns that no currency holds that status forever. According to her, the US is rapidly losing that position. She says this didn't just start recently. It began in 2000, which was the first time in history that the US central bank had to start buying back government debt. But, as she notes, they didn't publicize it because it wasn't a good sign. It only started to be seen as a good thing in 2009 with quantitative easing and all that. Based on her views, Lynette predicts that the US, and even other countries, could be heading towards a hyperinflationary depression because they need to burn off the debt.
Because they've got to burn off the debt. If they're going to issue new currency based on debt, then they have to get rid of the debt. And if you listen to the talking heads on Bloomberg, CNBC, wherever, and they're talking about growth, well, they're talking about the ability to take on more debt. And I don't care if you're a government, a corporation, or an individual, most are maxed out in their ability to take on more debt. So I see a transition away from the US dollar easily, and it's speeding up. Timing is the hardest thing for any technician. I can tell you what is most likely to happen based upon lots and lots of history. But we're at the end game right now. And I think what we are witnessing is a complete breakdown of the system, because the system actually died in 2008. And it was simply put on life support, and that life support is just the money printed, right? That's all that is that was the life support, because that's all that they have, is boosting up their balance sheet with lots and lots of garbage, buying back lots and lots of treasuries. But we already saw a lack of liquidity in the treasury market in 2015. And so that lack of liquidity, the ability to buy and sell easily without big dislocations, look at what's happening right now in the treasury market, and understand that the treasury market is the foundation of the global financial system. If you watch the patterns, you could see when the Fed handed over the management of the Treasury market in 2013 to the traders. Now, of course, they don't report that, the Treasury VIX, like they did anymore, because they don't really want you to see what's happening. But you now have traders making bets on the default of the Treasury market as early as, June 1st. And the government so divided, and I can't really tell you whether this is intentional or not intentional, because when you know you're at the end and you know you're going to declare bankruptcy, if somebody gives you a credit card, what are people most likely to do? Go max it out, because you know it.
Lynette Zang has been saying that if you watch the patterns closely, you could see that in 2013, the Fed handed over the management of the Treasury market to the traders. She points out that they don't report the Treasury VIX like they used to, because they don't want people to see what's really happening. Now, you even have traders making bets on the default of the Treasury market as early as June 1st. She mentions that the government is so divided that it's hard to tell whether this is intentional or not. She compares it to knowing you're going to declare bankruptcy if someone gives you a credit card. Most people would max it out because they know what's coming. Lynette believes we are dangerously close to a major financial crisis. She often talks about the issues we're facing with the banking system, inflation, the Treasury markets, and the shift to a new interest rate benchmark, which, as she points out, is really just more debt. She's been very clear that, in her view, whoever holds the gold will have the power and the choice, which is why central bankers are accumulating so much of it. She ties this into the broader context of a new world order that everyone is talking about now. But she's been discussing a social, financial, and economic reset since 2009. She recalls that one of her favorite reports was released around 2015, though she's not exactly sure of the year, called Breaking Below the Lower Zero Bound. It was about how they could take the whole world into negative interest rates. She argues that they want us to believe that negative rates are a choice, but why would anyone work hard to earn money just to loan it out and not get back what they lent? It's completely illogical, but she believes they can force it. They can force people to spend, and they can dictate where that money is spent. She also mentions that Ford recently got a patent for self-driving cars, which the IMF has talked about. With all these smart houses, smart cars, and other smart devices, everything is tied to smart contracts. If you miss a payment, they can lock you out of your car and drive it away, or lock you out of your house. She says this is why it's crucial to be as independent and self-sufficient as possible.